The US dollar has maintained its status as the principal reserve currency of the world for several decades following World War II. Bretton Woods' 1944 agreement created a new pegging of the global monetary system principal currencies in relation to the US dollar, which was exchangeable for gold at a predetermined rate. This arrangement strengthened the value of the dollar. Crucial part in international finance. Even following the Bretton Woods collapse early in the 1970s, the dollar remained dominant, supported by the United States' power and stability economy. The dominance of the dollar has provided the U.S. with substantial financial benefits that are frequently referred to as the term exorbitant privilege was created by the former finance minister of France. The 1960s Valéry Giscard d'Estaing demonstrates the advantages that the U.S. enjoys, such as reduced interest rates and the capacity to maintain trade deficits without any immediate effects on the economy. After the September 11 events, the United States stepped up its utilizing financial instruments as a means of this approach to national security policy, referred to as the weaponization of the dollar, required using the pivotal role of currency in international funding to implement economic sanctions and put the U.S. under geopolitical pressure. Government supervision of global financial networks, including the Global Interbank Society (SWIFT) or financial telecommunication, allowed it to keep an eye on and limit monetary exchanges involving targeted countries or organizations, and in reaction to these actions, a number of nations started looking into ways to lessen their reliance on US dollars. A procedure frequently known as dollarization. Countries such as China and Russia has been leading the way, and China has taken action in this movement to globalize its currency through the United Nations, encouraging its use in international trade and putting in place currency exchange agreements with other nations. Russia is up against economic sanctions, have made it more gold reserves, and attempted to carry out exchange of different currencies in recent years. China has strategically expanded its gold holdings as a component of a larger initiative to lessen dependency on the People's Bank of China. Has the US dollar been regularly buying gold, with reports suggesting that gold in China for the sixth consecutive year, reserves increased. April 2023 month, bringing the total. This video examines holdings up to 276 tons. China's calculated action to boost its gold reserves and their extensive influence on the global economy and the U.S. economy financial environment. In particular, we examine the ways in which this action limits the capacity of the Trump administration to oppose China's ascent and limit its developments in the economy and geopolitics. China's shift to gold, in effect, represents a substantial change in its strategy for national reserves and worldwide historical economic positioning. Admired as a hedge and a store of value in the face of economic instability, gold has returned to the national reserves' prominence. Maintain tactics in the face of shifting worldwide economic environments, and this video discusses geopolitical uncertainties, offers a thorough examination of China's large-scale gold purchases, investigating the underlying factors that influence elements and wider ramifications for international markets, and China's involvement in gold relations has strong economic and cultural roots, changing dramatically in tandem with its globalization and rapid economic growth in China. Gold has historically represented prosperity and financial standing, mainly serving functions in cultural and jewelry artifacts. But in the present day, particularly starting in the early 2000s, gold started to become more strategically important in China's overseas reserves from 2018 to in China's yearly gold purchases in 2023 showed a definite upward trend, displaying a purposeful and combative accumulation plan that begins with in 2018, about 250 metric tons purchases rose to a projected 550 metric tons by 2023. This expansion was impacted by favorable gold prices due to economic stability and increased tensions in geopolitics, especially with the U.S. as Chinese official gold. As of December 2024, the amount of reserves has reached about 2,264 metric tons, making it a single among the biggest gold holders worldwide. China's reasons for expanding its gold reserves are complex, including economic, geopolitical, and strategic aspects. The main force behind this is the expansion of China's foreign reserves. Historically, the weighting of reserves has been high in the direction of the US dollar, which accounts for roughly 60% of its properties. Investing in gold diversifies and reduces risks, connected to changes in currency and possible devaluations that would improve the resilience and stability of China's gold in the reserve portfolio, acts as a hedge against currency and inflation devaluation while maintaining the purchase reserve's power during economic uncertainties, lessening reliance on the. Another important motivator is the US dollar. In the face of rising geopolitical tensions, particularly with China and the United States, intends to advance internationalization of the yuan, promoting its application in international commerce and lessening dependence on the financial system dominated by the dollar. This tactic not only questions the US's leading role in the world, not only finances but also gives China increased financial independence and protections its reserves against possible US impositions, financial limitations or penalties, boosting the prestige of the country. And additionally, financial security is a substantial part played by substantial gold reserves represent financial power and stability that strengthens China's reputation as a prosperous country in the world stage. In addition to substantial gold, according to Holdings, China's economic sovereignty, offering clout in international discussions and enhancing its standing in the global financial organization. Strategic: the accumulation of gold is consistent with China's long-term financial planning that supports projects such as the Belt and Road Initiative by offering a reliable resource foundation for funding extensive infrastructure initiatives without over-reliance on outside funding. One of the Trump sources administration's favored methods to counter attackers were using the US dollar's dominance in international funding to enforce these sanctions were based on access restrictions to international trade based on dollar systems and freezing foreign-held dollar reserves by moving away from reserves of dollars and settling trade in different forms of money, like the UN or China successfully insulated itself with gold from the full weight of the dollar's sanctions. Gold reserves, in contrast to the dollar assets, cannot be altered or frozen by the US government, which makes it significantly. Trump finds it more difficult to isolate the economy China or penalize its businesses. Trump frequently threatened sanctions as a way to pressure on countries that trade with enemies such as North Korea or Iran. The ability of China to get around dollar systems through alternative financial methods and gold arrangements reduced its vulnerability to such pressure, making the attempts by the administration to isolate Beijing's economic and diplomatic. The trade war under the Trump administration focused on levying taxes, and trade terms had to be renegotiated largely on the dollar's place in the world. The purpose of the tariffs was to exert pressure on China by requiring its exports to more costly while helping its manufacturers and growing Beijing's economic susceptibility as China encouraged stockpiles and trade settlements in the UN. As a reserve, gold decreased its exposure to the dollar system worldwide. This undermined the Trump government's capacity to apply economic pressure. For instance, using dollar-linked tools, alternate methods of payment and bilateral trade agreements, partners assisted China in mitigating the effects. Trump's intention to impose tariffs on the US. Beijing to abide by his demands for trade became more difficult as China showed resiliency via reserve diversification with less reliance on the US Treasury bonds and reduced susceptibility to the dollar. Beijing's volatility increased freedom to handle financial disputes with Washington. Let's pause for a moment. If so far you've liked the video, could we ask for a small favor by clicking like button? Enables us to connect with more people, and offering your opinions or comments in the impact of the comments is even greater. Thank you for viewing, and let's get started. Back in China's gold holdings and decreased dependency on the dollar was consistent with its more general objective of developing partnerships with nations demoralized by the United States initiatives for financial dominance, like BR stands for the Belt and Road Initiative, offered a substitute economic framework which was less dependent on the dollar and more on the gold-backed trade or unsettlement accords. The Trump administration aimed to weaken multilateral frameworks and give us precedence through China's America First policy's dollarization approach, in conjunction with its capacity to support trade with gold and investment, resisted this strategy. For example, countries are cautious about the dollar. Sanctions thought it was more attractive to conform to the economic vision of China. Trump's efforts to distance himself from China, particularly by alerting allies against taking part in projects led by Chinese, encountered opposition as Beijing provided tangible substitutes, such as gold pathways were established using local currencies. For countries to avoid its financially mechanisms that restrict the administrations able to utilize economic seclusion as a tactical instrument, decreasing the efficacy of under Trump, dollar diplomacy was weaponized. The U.S. increased its utilization of leveraged dollar diplomacy as a weapon. The dollar's centrality in limiting international financial services networks such as SWIFT. This strategy was an important component of initiatives to limit China's technological developments, especially focusing on businesses such as Huawei and industries such as the manufacturing of semiconductors. By settling and diversifying reserves exchanges in systems other than the dollar, Beijing reduced the dollar's risk. Specifically, weaponization gold was provided. An inviolable resource Beijing could utilize to support its economy throughout sanctions or crises, which decreased the efficacy of Trump's initiatives to interfere with China's financial systems and factors influencing technological ambitions. Influencing several gold purchases. Both external and internal factors have an impact on the move by China to raise its gold reserves, economic expansion, and the resulting surplus in foreign exchange supply, the required financial capacity. For large gold purchases from China's persistent trade surpluses produce substantial foreign exchange reserves, of which is allotted to gold in part to ensure long-term stability and diversify holdings. The strong economy and financial health. China's performance improves its capacity to invest in gold or other stable assets. In line with its strategic reserve monetary policy objectives for diversification and interest rates are crucial as well. Roles in an environment with low interest rates. Gold gains appeal. Investment as opposed to fixed income securities that lead to more purchases. China's People's Bank is actively oversees reserve allocations in a way that favors gold to improve diversification and stability in addition to geopolitics tensions, especially those related to trade and risks of economic sanctions, push China to safeguard its reserves using concrete gold and other assets that guarantee financial global security in the face of uncertainty. The dynamics of the market, including gold mining output and price trends, greatly affect China's purchases. Tactics for gold price fluctuations affect the volume and timing of purchases made, with strategic purchasing frequently taking place when prices are declining to maximize global gold supply was constrained by investments. And a rise in the demand for investments can raise prices, requiring cautious organizing and building up reserves. Domestic laws and policies encompassing central bank directives and the roles of state-owned enterprises in gold. The mechanisms are shaped by mining and trading, and magnitude of China's gold reserves, making sure that it is in line with national plans for the economy, and the reserve diversification targets the substantial gold reserves in China. Purchases have a significant impact on international markets, impacting the price of gold. Currency dynamics, market liquidity, and international gold mining activities. The steady and substantial demand from China puts pressure on the world economy to gold prices, particularly during times of economic uncertainty, consequently impacts investing and trading, and speculation. Trends in global large-scale purchases contribute to ongoing or rising. A bullish outlook is supported by gold prices that promotes additional investment in gold, and associated assets rose in value. Liquidity brought about by China's participation in the gold market improves. Gold is more accessible due to market depth and exchangeable for additional investors, and this additional liquidity helps nations to counteract market stability swings and speculation, and offering a stable demand base. But China's additionally purchasing trends can introduce volatility, with sharp rises in demand causing price increases and possible trading activities that are speculative. China's decreased reliance on the United States dollar and rising gold prices. Global currency impact of reserves dynamics through currency promotion diversification as well as the yuan's internationalization. This change may have an impact on exchange rates, possibly making the dollar less strong control and helping to create a more addition of a multipolar currency system. China's increased demand for ally encourages gold mining worldwide activities to grow and develop, impacting mining and supply chains, economics, environment, and regulation. Consequences of increased mining activities require long-term methods to lessen ecological effects. China's substantial gold purchases have complex effects on the U.S. economy, which is especially concerning the global standing of the dollar, extending its reserves beyond our reach. gold prices and treasury securities. The goal of Holdings China is to lower its reliance on the dollar. A phenomenon known as dollarization is a tactic that is partially driven by tensions in geopolitics and the intention to reduce exposure to possible sanctions from the U.S. While China's behaviors show a move in the direction of reserve diversification's immediate effects on the American economy is complicated. Advantages of the dollar reserve currency situation that allows for reduced the cost of borrowing and the capacity to operate trade deficits as a slow retreat by major economies from the dollar could eventually result in increased borrowing costs and less financial adaptability for the U.S. But such a shift is probably to be slow because of the dollar's strong function in international finance. In addition to China's wealth accumulation helps to growing gold prices worldwide, which can impact our financial markets and investor conduct as gold gains more appealing asset. There might be changes in portfolios of investments that are not based on dollars. Potential denominated asset assessment impacting our demand. China's strategic gold and securities accumulation has significant ramifications for global economics and geopolitics. Could change the world. The financial systems of reserve holdings and geopolitical partnerships such as China expands its reserves outside of the US dollar. The conventional environment of reserve holdings worldwide go through substantial alterations that pose a challenge to the dominance of the dollar and its promotion. A reserve system that is more multipolar change may have an impact on international organizations such as the International World Bank and Financial Fund, prompting modifications to frameworks and policies. To take into account changing reserve compositions, the accumulation of significant amounts of gold. China's reserves could act as a catalyst. Conversations about reorganizing the global financial system, which includes discussions about going back to a gold-backed currency system or implementing currencies linked to commodities, but it's unlikely that the gold standard will fully emerge in the immediate future because of logistical and financial difficulties. The strategic gold holdings by major economies such as China bring stability to foreign exchange rates and declines vulnerability to inflation. In terms of geopolitics, gold reserves offer China has more clout in global discussions and strategic partnerships. Bilateral agreements and strategic alliances could be impacted by gold holdings of China, enabling economic diplomacy and bolstering relationships with resource-rich nations. Gold can act as an instrument for economic diplomacy, providing dependable assets in return for political backing or tactical collaboration, thus strengthening China's influence in international affairs. Diversification of reserves also affects international trade agreements that could resulting in clauses that permit payment in several different currencies or add gold to the list of settlement assets. Represents the larger movement towards keep diversification in mind and can impact trade and tariff policies. Management of balance protections for investments within these agreements might support holding reserves. Countries guaranteeing favorable circumstances for resources such as gold. Anticipating China's gold, the accumulation strategy is ready to continue to influence its economic and the geopolitical environment is impacted by anticipated trends in the accumulation of gold. Possible changes to the policy, technological advancements, worldwide economic as well as political situations and sustainability factors. It is expected that China's yearly gold purchases will continue to be high, possibly going over 600 metric tons by 2025, with particular goals for gold reserves held by its overseas holdings. Throughout the upcoming 10-year policy changes could consist of increased adaptability in reserve management methods that permit the People's Bank of Gold holdings will be adjusted by China in reaction to economic metrics like rates of inflation and currency values. Greater openness about gold purchase plans and reserves could create stability and trust on a global scale, while domestic laws could encourage the purchase of gold, recycling and mining to guarantee a consistent supply that meets reserve goals. Developments in mining technology and urban mining capabilities will have an impact on China's capacity to obtain and oversee sustainable innovations in gold reserves. Technologies for mining can raise extraction effectiveness and lower effects on the environment. During the adoption of blockchain technology for monitoring and gold trading can improve openness and safety in international economic transactions and political situations will persist and influence China's gold purchase. Variations in global growth strategies, rates of trade, political stability, and environmental policies and relations will affect the supply and demand for gold. Factors affecting China's purchases choices regarding sustainability and environmental factors are growing in significance, with more stringent laws and corporate initiatives for social responsibility promoting sustainability and greener practices methods used in gold mining. I appreciate you sharing this video. As we watch this video, we truly thank you for being a part of our content that struck a chord with you or inspired inspiration. Please think about expressing your backing by enjoying it and signing up to remain in touch with our community.